Bitcoin dropped from a peak of $126,000 to around 60K, and the critics are out in full force calling it a bubble yet again. But is this a market collapse, or does the data actually tell us a completely different story? In this episode, I'm joined by James Check. In a market saturated with clickbait and panic, he's become the go-to analyst for anyone who actually cares about the data. We're moving past the doomer headlines to look at what the coins are actually doing, regarding of what the talking heads on the news or X are screaming. And keep watching as James is going to reveal why he thinks your favorite market indicator might be a lie, a prediction for 2028 that most people are still too scared to believe, and what smart money is signaling right now. If you're enjoying my content, it would mean a lot to me if you could subscribe to the channel and like my video to support my journey. Thank you. All right, let's dive in. James Check, welcome to Bitcoin for Millennials.
G'day, mate. It's good to be here. Finally. Took us a few goes.
Finally. Yeah, we made it. Yeah, I'm super happy you're here. I think you are a breath of fresh air. And I really enjoy how you approach, all the charts, analysis, price action, stuff like that. So when the price is at all-time high, there are basically no critics, right? They are extremely silent. Now that we're hovering between 60, 70K, still up multiples, by the way, from 2022 lows, right? Bitcoin is dead. It's a Ponzi again. It's a tulip again. It's, I always wonder who runs the Ponzi or the pyramid scheme, but they never really reply to that. From a data perspective, what is the blind spot you think exists that allows all these people to come out and ignore $1 trillion asset class until it, breaks down crashes a bit by 40%?
It's a great question. There's a few angles to this, but to answer the question directly, I actually think the thing that there's a few elements, but I think the one thing that drives people mental is that it's not physical and they can't reason about it. That's what I think is so interesting about one of many things that's interesting about Bitcoin is the digital scarcity thing. So it's not tangible. It's not a gold coin. It's not a house. It's not a car. It's not a thing that I can it's like an object. Is it an object? What is it? I think that just trips a lot of people up because it does require lateral thinking to be like, I kind of trust the mathematics and the code and the structure and the incentives. You do have to do work to understand it. And I think another element to it, so when I left my job as an engineer to move into the world of Bitcoin full-time as an analyst, I left because I didn't really talk about it a great deal at work. And then on my last day, people started to work out, he's not going into finance, he's going into Bitcoin, what the hell? So anyway, I drafted up an email to all of my closest colleagues where I said, look, yes, I am going to be a Bitcoin analyst. It's something that's just captivated me over the years. Here's 10 bullet points that you probably haven't heard, right? Taking the energy side of the equation and just all the different components, why it's important, the scarcity. So 10 bullet points. And the last one was all about the media. And I said, you can probably count on one hand, how many positive media articles, this would have been in 2021, how many positive media articles you've ever seen about Bitcoin. And I said, just think about the incentive structure. Most people, because Bitcoin is so new, most people have never bought it. They've never ridden the wave. Which one's going to get more clicks? You are right to have ignored this thing. It is a scam. It's a Ponzi scheme. It's collapsing once again. You made the right decision by staying ignorant and not buying it. Or, yeah, remember that article we wrote that was really bearish on this thing? It turns out it's actually quite an important innovation and you probably should have bought some. Sorry about that. Which one is going to get more clicks? Confirmation bias. People are going to go for the confirmation bias. So last point on this, because I think there's actually a lesson here to be learned on human psychology, which is my favorite lens to look at the market for both the bulls and the bears. You're right. At 126K, there are no bearish headlines, because it doesn't feel safe for the journalist to pen an article that says it's going to zero, because their recency bias is just green candle, green candle, green candle. Once it's down 50%, this is why journalists write bearish articles at the bottom, because it now feels so safe to jump in the bearish pool. The other way around is also very, very true. I got no calls this cycle from new people coming into Bitcoin, should I buy some, whatever. I got tons of calls in around July, August, as we're breaking above 110 for the second time. heading towards the all-time high, from existing Bitcoiners saying, where's the best place do you think for me to lever up and borrow against my Bitcoin to buy more? And I was like, it's starting to feel safe for people to jump in the bullish pool. So this is one of those things where it's all human beings like looking for it to feel safe. And then they make the exact wrong decision, because when it feels safe, it's because everyone's already bought or everyone's already sold, right? Yeah. It's at the extremes.
You do see that a lot of people, even people that are into, let's say, broader crypto, finance also, Bitcoin also, are hit, I would say, by all these negative this negative coverage, basically, and I agree, it's all for the clicks. But you are calling this a modern bear market, right? So for people who think, oh, I lost all my 2025 gains, etc., how does the data that you're seeing, that you're looking at, actually help people distinguish between, structural failure, Bitcoin is going to zero, the thesis is wrong, it in fact was made by the CIA and is a pyramid scheme, a Ponzi and Tulip, all into one, or just, a mechanical flush, the market is clearing leverage. This is part of a broader cycle. I realized last week that I've been in 70+% drawdown. So, looking at the percentages here, it's quite okay.
Yeah. So that is exactly right. So the lens to look at this, we really didn't get a euphoric blow off top. Now, how do you define a euphoric blow off top? There's obviously like all the mood and the feelings and everything that come with it. But ultimately, it's you get stretched too far away. So markets from mean reverting, any asset that is like worth owning will go through booms and busts, right? And what is it oscillating around? Some kind of mean. And there are many means, right? There's things that the market just gravitates around. So from my perspective, you can look at like technical indicators, 200-day moving average. The 200-day moving average is naturally, it is literally a derivative of price. So it's going to oscillate around that over time. There's also things we can look in the on-chain world. We can look at cost basis levels. What's the average price everyone bought their coins at? What about only the people who bought recently? What about people who've only held for multiple years? All those different components. The market just oscillates around those things, because when it goes too high, people sell and take profit. When it goes too low, people also sell out of panic and fear, which lowers the cost basis to somebody else. So these mean reversion models, they work both to the upside and the downside. So the reason I can say that we didn't really have a euphoric blow-off peak is we never really got to extreme deviations probabilistically to the upside. There's also no reason that we have to hit a certain level. Now, on the downside, the pace and speed, I think, is kind of surprised. I think a lot of people didn't expect a 50% drawdown, but it's like, well, why? As you said, 75. And by the way, just to that point, I've also been through several 75% drawdowns. How good is it in terms of like character building though? There's something very like the amount of resilience it gives you as an individual to like experience that.
Very true.
Is hardcore.
Yeah.
50% down, like it's kind of another day in the office. And I find that.
But I have to say the randomness got to me. I think like the randomness that you were referring to also, it's just strange.
Yes.
At least for me, I'm not a technical analyst or chart guy whatsoever. So that's the context.
So there are a lot of things that are similar in this bear market, but there are also many things that are different. So in terms of the similar component, we saw what I call a top-heavy market, which is where you just have tons and tons of sellers at the top. But if you think about who a seller is selling to, it's buyers. So when we got to the all-time high in October, about 65% of there's a metric that we call the realized cap. Think about it as the invested wealth. In US dollar terms, a coin bought at 10K is worth 10K. A coin bought at 100K is worth 100K. So it's heavier if it's at a higher price. Yeah. 65% of the wealth was above 95K. Now, that's a meaningful amount. That's, a super majority. And as we sell off down through those levels, by the time we got to 105, half of that 65% was underwater, right? The price is now below its cost basis. So there's just a lot of people who bought the top. Now, as the market sells off, more and more of those people go into loss. They see and there's three things that hurt in bear markets. There's the thing that people think about, which is I bought the top and now I'm underwater, right? Unrealized loss. There's another one that people don't think about, but it actually hurts a lot, which is, I was up 150%. Now I'm flat. So watching their unrealized profit evaporate. And the other one is how long it takes. Bear markets, like if you really take an honest view, the 2018 bear market started in December 2017 and didn't end till December 2020. That whole long sideways period through all of 18, 19, and most of 20, that is the bear market. It's one big sideways chop. 2021, it's basically 2022 all the way through 2023 before we really got any serious uplift. So the time component gets people as well.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. OnRamp's multi-institution custody model distributes control access across 3 independent regulated key holders in a 2 of 3 multi-sig quorum. No single point of failure, no pooled or omnibus exposure, just segregated client-titled vaults. You retain full legal ownership while OnRamp coordinates security, compliance, and operational workflows behind the scenes. Multi-institution custody is the foundation for everything that OnRamp builds. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now OnRamp is piloting flat, predictable pricing to make best-in-class Bitcoin custody and financial products more accessible than ever. Visit onrampbitcoin.com to learn more and sign up with code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. OnRamp, strength in many, simplicity in one.
Now, the drawdown at the moment is about 52% at the peak. There's 2 kind of bookends that we tend to see in a bear market. And by the way, this is my current assessment. I'm very happy to be wrong, but my current assessment is we generally have 2 what they call capitulation events. Everyone gives up at the same time. And how do you tell when people give up? Coins bought at a high price, like 100, 110, 150, they just go, I can't do this anymore. And they all sell and take a big loss on the same day.
Yeah.
Now,
oh, really? On the same day?
Oh, yeah. Oh, you see it all happen. So great example in 2022 in June when 3 Arrows blew up. That was one of the largest capitulation events we've ever had. The next one was FTX. Now, June 2022 bottomed at 17,600. FTX occurred 8 months later at 15.6. Now, for people who are in an asset like Bitcoin, what's the difference between 17.6 and 15.6? Nothing. In price terms, it's irrelevant. It's the same price. The difference is actually the 8 months in between them. And that's the key component. You've got the price pain where the people who simply can't deal with number go down, they usually capitulate at the bottom of the price. And it's my view at the moment, my working thesis, that flush out at 60K in February, I think that was the price pain capitulation. People who couldn't handle the market going down have said, I'm done, I'm throwing in the toys, I've had enough. Then we have the time pain component. And this has gone from anywhere from 12 months to 4 months to 5 months to 1 day in COVID. The time pain component is this like sideways chop where we hammer out a bottom. And that, who knows how long that goes on for, but a lot of people, you're now down bad and you've got to carry it. You've got to sit there and look at your portfolio being red and be like, this is never coming back. When will it come back? And the narratives get worse and worse, and you get like slightly lower lows in price. But the difference between, like, let's say, for example, the final bottom is like 50 or 55. The difference between that and 60 is irrelevant. It's the time in between. So my view is that we're somewhere in that realm. Now, to go back to your original question, what is different about this kind of bear? Why do I call it a modern bear? We didn't get the euphoric peak. That doesn't mean we can't have a catastrophic low, but we're already, in my opinion, getting we have a candidate. I would call it a bottom formation candidate between 70 and 50. That is the zone where I think there is a very good chance that we actually do form some kind of a meaningful bottom. And if that occurs, and we head higher, are people going to say that this was like an FTX grade bottom? Are they going to reset their cycle charts based on this 50% drawdown? If we go to a new all-time high, people are going to call it a super cycle and say, oh, it was a correction all along. It's all part of the same bull. People aren't going to know what it is because it's kind of like previous bears, but it also has a lot of things that are different. So I actually think this is a very good thing. I actually hope, and I would like to see, and I would like to see this bear just break people's mental frameworks for Bitcoin. and stop thinking about this thing in this silly 4-year cycle dynamic, because you can explain all of Bitcoin's price history without a 4-year cycle dynamic, just based on what the world was doing at the time, what the internal supply and demand dynamics were. So anyway, I'll leave it there, and that's my general thoughts on the current setup.
There's a popular meme, right, that says technical analysis is just astrology for men. You've built a career on data. How do you respond to the critique that all chart analysis is just pattern-seeking behavior that kind of creates, self-fulfilling prophecies rather than actual insight? Yeah,
exactly. It's all tea leaf reading, right? Tarot cards and the like. So at the end of the day, what is technical analysis, right? If you go to the core, it's the analysis of price and volume over time, right? 3 components. Price is what people respond to. Think of it as it's both the answer and the incentive that drives people to make decisions. What is volume? It is people exchanging the asset at that price. Now, when you don't get people exchanging the asset at that price, you don't have a reason, there's no support and resistance. People haven't actually bought and sold, and most importantly, anchored their psychology to it. So I like to use the example of the Mt. Gox coins. Some of these guys were buying Bitcoin when it was like $10, $100, cheap prices back in 2013, 11, whatever. They got their coins back in 2024 at about 68K, almost at the exact price we're at right now. Imagine you're one of those guys and you get given back your coins you've hodled for, 14 years or something? Yeah. And you get them back at 68K and the price sells off down to 50. How are you going to feel? Are you going to feel like, oh man, now I'm only up 65,000% versus 78,000%? Or are you going to think, damn, I could have sold at 68 and here we are at 50?
Mm-hmm. Probably the latter.
Exactly. People's recency bias anchors to our last decision. As a hodler, if you've been in this market for a long time, you're well and truly up. You don't care. But every time you buy, you just do your latest DCA and the price goes down 10%, you go, oh, that stings. That sucks. I could have bought 10% more. You anchor to your most recent thing. So the reason why I bring that up, price and volume, if you're getting people exchanging the asset at that price, it's creating this support and resistance type dynamic. So technical analysis is literally the study of human beings making decisions, and the volume is the confirmation that something has relevance. People have chosen to actually buy and sell at that price. I then go kind of in the next level and say, well, we've got a whole Bitcoin is structurally, it's a big database of transactions, who bought and sold and held and at what price and whatever else. So we can basically analyze how people are moving coins, holding coins. How long do they hold them? When do people who bought a long time ago start realizing big profits? And if you can believe it, they do it at cycle tops. Why? Because the price is going up. So you kind of see this human psychology. So sure, it's voodoo. It's, it's astrology for men. However, you're also basically saying that price, which is information, volume, which is information, and the Bitcoin UTXO set, which is a database of information, the claim is basically that it is impossible for anybody with any skill level to identify human patterns. Mm-hmm. And then I just go back and go, guys, look at the world around us right now. It's the Roman Empire. We're doing the same thing that the Romans were doing, right? It's the exact same thing. We just have computers now. So, human beings, the thing that my core anchor for my analysis, the price is different, the interest rates are different, Jay Powell's mood is different, everything changes in the world, but the human condition of making emotional decisions to buy and sell an asset, to chase greed, to be fearful, those things are constant. And all we're doing is studying pockets where lots and lots of people are going to be very, very scared. And that's how I actually model things. When I was looking at this 70K, 60K zone when we were at the all-time high and saying, I was just modeling, if the price goes down to these levels, we will hit the same pain threshold that we've seen at every bear market floor. So that's not a prediction to say this is where the market's going to bottom. It's saying we've got to get below 80K and we will start seeing bottom formation things. That was months and months and months ago. Here we are below 80K and we're seeing bottom formation things. And I was always targeting this 2024 where we chopped around in 2024 and saying this is where we hit pain thresholds. And lo and behold, we get down here, massive capitulation events, $2-3 billion a day worth of losses locked in on a single day. My phone lit up like a Christmas tree. I had podcast requests. I had people saying, my clients are scared. What do I do when we hit 60K? And I was like, there it is. That's human psychology doing exactly what it does every time it's given the same set of stimulus.
Would you agree that in order to be or become a good hodler and kind of tune out this noise of people that I always say don't understand what they're holding, right? What should they do?
Honestly, so a lot of people actually ping me and say, I don't read his work because he writes for traders. And I'm like, I don't write for traders. I never write for traders. I only write for hodlers. And the reason I write for hodlers is, first of all, I found that was actually a gap in the market. There's a lot of people who write and do analysis because they want to put like entry prices, stop losses, take profits. Like, I don't care about any of that stuff. I couldn't care less. I'm not a trader. I hate trading. I think trading sucks.
Same.
Yeah, no, it does. It's horrible for the mental state. It's just really bad for your health.
Yes.
So what I prefer to do is just visualize why the market does what it does. So the way that I try to write, and the kind of my business model is very much to just help hodlers tune out all the narrative and say, I see all of these stories, right? It's manipulated. It's quantum computing. It's this, it's that, it's the other. But in the data, and when you just objectively look at the data, you can say, well, sure, there's manipulation happening, but also see that like $3 billion a day of sell side by people who've held their coins since the last bear market floor, and they're all selling today. Yeah, they did that yesterday as well. And you know what? They actually sold the same yesterday and the day before that. Oh, look, they're still selling. It's like, sure, there might be manipulation, but it also could just literally be good old-fashioned sellers. Could just be sellers. So like you and then when you see it over and over again, and you see so many people jump on the latest bandwagon. Oh, now Binance is manipulating the market. Now it's Jane Street. Now it's Coinbase. Now they don't have the coins in the ETFs. Now Sailor doesn't have any coin. Just like, there's also just a lot of selling. You know what I mean? Like you can actually simplify and visualize the world. So personally, I find, and look, some people aren't data driven. That's why I try to use like charts and also just like tell these stories to make it a bit more tangible. But the data tells the reality of what's going on. Yes, you need a certain skill threshold and work to understand what you're looking at. However, the data's there. It's all there, and you'll be amazed how many people just simply don't look. They just don't look, and they don't actually want to answer the question, because when you answer the question, sometimes it's a bit dry, like, yeah, guys, there's just a lot of sellers. You don't get as many clicks and engagement for that.
I like that standard reply on X, when someone says like, oh my God, what's happening with the price? And then it's just, you should just reply, there's more sellers than buyers.
And that is true, right? And if you can throw a chart in front of them and be like, and I've got charts that try to do this, right? It's like, it's like a 30-day change in people's sell side versus buy side. And like, there's this massive orange wave that shows the selling by hodlers. And then down the bottom, there's this tiny little purple blip. That's sailors buying. And you're like, see that thing down there? That's like the 10% of all of that height. And then the ETFs are like 20%. You're like, everyone who's saying that sailors are the only buyer, I'm like, you're kind of missing the other 95% of where the hell did those coins go? Who bought those ones? Because it wasn't him. Yeah.
I had my previous podcast, I did a solo episode titled Sell Bitcoin for What? And I kind of like went through all these other assets, right? Like, when the price goes down, or also when the price goes up, right? Like, people ask me like, when are you going to cash out? Or like, aren't you going to sell, right? And then, I jokingly say, sell for what? But there's a lot of reasoning behind this. So I did this podcast episode, but this is what I think people should do. Is like, okay, if you're into Bitcoin because it's a trade, or you think it's a get rich quick thing, you're going to be humbled quite quickly, I would say, right?
Yep.
And I really like how you approach what you just shared about, how you want to service the hodlers. I think it's both of those things, right? What you're doing, but also just fundamentally, please try to understand what Bitcoin is, why you should hold it. And if you're thinking about selling, please also look at all these other financial assets that you could own, understand their characteristics, their flaws, and how they, stack up against Bitcoin. And yeah, I honestly, and I think you're a similar person, right? I just ended up with Bitcoin because I'm thinking in a rational way based on my self-interest.
Yep. And also, like, I actually feel blind when I look at, like, I own gold. That's the other big part of my portfolio. I don't have anywhere near the amount of data that I've got that I do for Bitcoin. Like, for Bitcoin, I know I know it like the back of my hand. When I need to go and say, is there too much leverage in the system? I'll go and check. I know all of the tools I need to do that. For gold, here's a $50,000 a year Bloomberg terminal, which also you need this data input. And like,
still can't tell you.
and by the way, the data might be flawed. It also might only come in quarterly. And China's not sharing their data anyway. So you're like, yes, but they're kind of the biggest buyer. It's like, how do I judge this thing? So there's so much gap in the market. If you're not a privileged insider in the world of Wall Street, it's very, very hard to get clean, accurate data. You can get the price chart, you can get the volume. There's a lot of information there, but for Bitcoin, I can see the whole map. I can see all of the terrain. I can see when old money starts moving and when it, people who bought the top. Was the other thing. It's all about, like, what do you expect to see at the top? I want to see lots and lots of leverage. I want to see lots and lots of people who bought a long time ago taking profit. And the narrative will be there is no top. Right? You put those three together and that pretty much describes where we're at. And then flip that around. What happens in the bear market? All the people who bought those coins go, I can't do this anymore, and they sell down to the same buyers, so that they buy it off them and they sell it back to them at a cheaper price. Exactly. No one wants to take long leverage, and we're there right now. There is no long leverage at all. People are going short, which is a great thing to see because they feel safe to get in the pool. They want to go short at the bottom and win it all back in one trade, and they end up losing again. So you just see, like, everything flips around in reverse, and it's just a process of a pendulum going from one side to the other.
Yeah. As a data guy, you live by your models. Has there ever been a moment where Bitcoin did something that literally destroyed your mental model or forced you to kind of throw a core assertion in the trash? Like, have your models been destroyed?
All the time. Yeah, all the time. And so there's two answers to that. One, I wake up every day expecting and looking for which models have broken. And I'm consistently impressed at how many don't. Now, there are certain types of metrics and tools that certainly have broken over time. And also, my journey as an analyst, I got a lot wrong in 2021. I got a ton wrong in 2021 because it was, on-chain data was started in 2018. We never really had a bull market until 2021. And then even then, most of the tools, none of us understood any of them. So, and there's a lot of tools that over time we have to correct and adapt. And it gets increasingly nuanced the more mature Bitcoin gets. Just as a kind of an example, Satoshi and all the lost miners, they currently hold like $110 billion worth of unrealized profit. But they can't spend them because they're lost coins, right? They're not responding to the market signal. In order to get to the break-even price that we use in the on-chain world, you have to have $110 billion of people who are active and do capitulate losses and are real people. They need to carry an equivalent amount of loss to get to break-even. So a lot of people are currently expecting us to get to break even because we did it in every previous cycle. And my case is, well, actually, over time, we should not be going to break even because there's all this unrealized profit. So there's those kind of weird nuances that I have to always be on the lookout for and thinking through these things to modify, adapt, and evolve. There are many metrics that just simply don't work anymore, right? And you could argue, did they work in the past? But like some things in the Bitcoin system change. Since we saw ordinals and inscriptions and all that junk get put on chain, things like transaction counts no longer matter and active addresses no longer matter for all sorts of weird nuances. So there's metrics that were super useful in 21, but now people are looking at them going, oh, look, this thing looks really bad. It's like, no, but you've missed the nuance. So there are tools that break all the time. However, a lot of the core set that I use, I kind of look for them to break because then I'm like, oh man, now I got to really work to fix them. But they seem to be just humming along. quite all right, actually. So there's a lot of things I got wrong. There's a lot of things I learn over time, as any good analyst should do. And I'm always looking for tools to break. Most of them don't. Some of them drop off the map every so often.
For my European friends that want to buy Bitcoin with ease, check out Relay. I've been a longtime fan and happy to partner up with what I think is the best Bitcoin-only platform for Europeans. They offer a super simple, beginner-friendly app with no distractions and no shitcoins. You can do a quick one-time smash buy or set up automatic purchases when you're stacking regularly. And here's the thing that matters most. Relay is 100% self-custody. Every set you hold is yours. Your keys, your coins. If you want to get started, download the app via my link below or in the description and use code BRAM, that's BRAM, at checkout to get 10% off your fees. A huge shout out to Relay for sponsoring the show. Now let's continue. I think you're the best person to ask the following. You know, the bigger thesis of Bitcoin is obviously, you know, Bitcoin has no top because fiat has no bottom. But when you're looking at the charts and you're looking at the dollar price, right? Every asset is basically denominated in dollars, right? What we're looking at. But you would agree, if you agree with the bigger thesis, right? Like fiat denominated, trending to zero type currency. Is that a good way to kind of look at something like Bitcoin in a data analytics way? Does that make sense? Like if that is the ruler, right? And that's constantly changing. How can you make sure that how you look at Bitcoin is a correct way?
So there actually is, I think, a very definitive answer to this question. And that is, there's a great project, which I think is fascinating, called UTXO Oracle. Now, again, going back to what do humans do? We send round numbers, $100, $1,000, $10,000, $10. Those round numbers, this UTXO Oracle project, they basically look at the Bitcoin blockchain. They don't read the price. They don't look at Binance. They don't look at... Yep. Yeah. What they do is they identify that human beings love to send $100, a round number. So if you can see that there's a band where lots of coin, like, because in Bitcoin terms, that varies as the exchange rate fluctuates, you can actually see the price of Bitcoin imprinted into the blockchain itself because of these round numbers. Now, that doesn't exist anywhere near to the same extent for the euro or the Aussie dollar or the gold price. So people do think in the US dollar. And remember, Bitcoin's a global asset. So people in Turkey, people in Venezuela, people in America, people in Australia, people are transacting in US dollar terms on the Bitcoin blockchain itself. So that is why I think that it is actually the correct reference point, which in many ways... I fall into the camp where Bitcoin is not going after the dollar. It's going after the global reserve. So there's a global reserve currency and the global reserve asset. And I think that's very much a bifurcation of currency is medium of exchange, asset is store of value, unit of account potentially. But the idea of these two things is I think the dollar is going to be around for a very, very long time, for the foreseeable future. The US dollar is going to remain that way because it is stronger and more desirable than every other fiat currency. So the answer is the lira will go to zero and the bolivar will go to zero and the Australian and Canadian dollar will go to zero before the US dollar does. So the US dollar is going to be the last man standing when it comes to fiat currencies. There will be other currencies that pop up around that because governments aren't going to want to give away that kind of control. But I do think that until it loses its global reserve currency status, which I don't see happening anytime soon, human beings will continue, and maybe even increasingly so, transacting in the US dollar, especially as stablecoins proliferate. So, yes, I think it is the right reference point because human beings have, frankly, freely in the market chosen it. That is the reference point.
Yeah. Very interesting thought, actually. Like, even if the US wouldn't want to be the world reserve currency anymore, right?
People do.
Yeah. And that's funny, right? Because that goes back to part of the answer to the question, what is money? Well, whatever people believe it is, right? So if you are in one of the, I think there's like 14 countries that use the US dollar, for example, as their main currency, but also just, you know, between people in general, if the social consensus is a dollar trumps any other whatever, you know, a bill or coin, and I'd rather have that from you than some rando whatever coin in whatever rando country in Africa, then the dollar is going to proliferate even when the US doesn't want it to, right?
Yes.
So
there's no areas of the world that have adopted the Australian dollar for anything. You know, like in many ways, it's like a casino chip that's only useful here on this land. You actually can't use it for anything else.
But these people are also not going to sit down and be like, well, what's the new world order, right? Should we buy this BRICS basket of whatever? I don't know. Like whatever they come up with, right? So I think that is a very under-discussed
it's freely selected. And actually that's why I think things like Tether are so interesting, because the market selected Tether. Tether didn't force people to use it. It just came out with a dollar stablecoin that people in the third world adopted. In a lot of places, you can use it just as money. So it's quite remarkable how the world just selects freely by their own choice these things, and that's the market speaking.
I wish we had that in Western countries and they wouldn't force us to use their currency, right? Well, anyway, maybe that's a different conversation. Maybe that's a different conversation. So back to the data. You recently noted, you kind of hinted to that, like old coins, right? Like 3 to 5 years of age, they're kind of returning back to the market. I would assume this is also a certain signal that that you are following. You know, like I said, I'm not an analyst, but I really like watching the hodl waves. I think it's super interesting just in general that, well, maybe it's a bit lower now, but I would say safely, you know, just from the top of my head, probably between 55 and 60% of all coins haven't moved in like 3+ years, something around that. And that signals to me, you know, these are people that understand what this is, right? To go back to the underlying thesis understanding, right? Like those are people that went from 5+ years is really back to 16K. But like, you know, these people have had a huge drawdown, bigger than what we've had now, right? If they keep on hodling, you know, they are turning into like actual long-term holders because they just understand the broader thesis, right? But when you were looking at these 3 to 5 year old coins coming back to market, what is that? Are these, you know, is that smart money exiting? Is this whales that have a certain threshold, or like how do you view that? Because I think actually what I'm asking is, I think 3 to 5 years is just an interesting range in general, but also from now back to, let's say, COVID top-ish area. Yes, basically.
Yes. So in terms of the general structure of things, from April, but really June last year, so kind of middle of the year, all the way through to November. So just to give you a bit of frame of reference, that's where we've gone. We sold off down to, what is it? I think 75K when Liberation Day and tariff tantrum and all that stuff. 75K. By April, we're bouncing. I think by July, we were up at above 100K somewhere. And then from July through to October, we're kind of chopping sideways, but with a slight upwards tilt, right? 100, 110, 120, 125. That whole zone, we saw the largest distribution that we've ever seen by old coins. And this is like coins that are 15 years old, 10 years old, 7 years old, 5 years old, 3 years old, the whole spread. It was the most diverse and large scale mass sell side event that we've ever seen in dollar and Bitcoin terms. So in my view, that was like I called it the great rotation at the time, because if we think about where Bitcoin is in its life's journey, it's like it's at the estuary where it's dominated the freshwater lake that it grew up in. It's the biggest thing in the freshwater lake. And that is all the hodlers like you and me that bought it when everyone was telling us it was wrong and blah, blah, blah. There's no ETFs. There's no infrastructure. We got it to $2 trillion. We're now in the world where it's swimming out into the big, bad, salty ocean. And we're at the estuary between, as those two waters mix, the salt and freshwater mix. And it's kind of this rotation of the people. Like I really do like Jordi Visser's analogy of it being like the IPO moment. People who have been in the company forever, since the early days, they still believe in the mission, but they're also really, really up on their position. And like selling a little bit to diversify into other stuff means you're just no longer 99% allocated to one thing. And I certainly know for me, like I haven't sold any Bitcoin. I don't choose to. It's my longest duration asset, but I have bought at the margin less Bitcoin this cycle than I usually do. I've been buying other things, precious metals, a few stocks here or there. Why? We were talking before we hit record. I got a son now. My life is just different at my current age. I can't be 100% Bitcoin anymore. I just can't. Like, as a practical thing, I need other things in my portfolio as a bit of ballast. I can't have my entire mood swung around by the Bitcoin price. So there's a lot of people who are going to be doing the same thing. And what was 2025 on the other side, on the buy side, we had institutions coming in for the first time. We had ETFs for the first time. We had Sailor buying just tremendous amounts of Bitcoin, amongst other treasury companies as well. There was a huge amount of demand. So the folks who got Bitcoin from 0 to 2 trillion finally had the opportunity to sell in size at scale to willing buyers who had the capital to actually take those coins off their hands. So we're talking hundreds of billions of dollars. So that was really what 2025 was. And here's a really key insight. That sell side, that profit-taking sell side, stopped almost to the day when we sold off in November and hit 80K. Just completely off a cliff. So there is signal there. The old hands knew that above 100K was probably a bit frothy. It's late stage in bull. There's enough demand for me to actually exit. Now is the right time. Once we got to 80K, the signal was the opposite. Now is not the right time to sell. I'm going to back away. So now we're in the stage of the people who bought that top. They're crystallizing losses on the way down, where we've switched over from a profit-absorbing market to we're now just trying to flush out the top buyers who don't want to see the end of the movie. So there's been a very clear psychological shift. It started at 80K, and once we got down to 60K, profit-taking is just, it's basically back down below 2023 levels. So pre-bull market stuff. No profit. Over the last 30 days, a lot's happened in the last 30 days. Less than 8% of all the coins that have moved came from a price below 60K. The vast majority of people are people who bought the top that are currently transacting. So we're in this, like, you would know, right? When you've been in Bitcoin for a long time, even if you sell some, you're not going to be like, oh, I'm never going to look at that asset ever again. Like, Bitcoin is this thing where, like, once you understand it, you literally go so far that you make a career out of it, you make a podcast out of it, because it's like, it's so fascinating. What are these smart old hands doing? They sold the top. They're now no longer selling. They're in either wait and see mode, or they're in, I like that price mode. And if they're in wait and see mode at 80K, where do you think they are at 60K? They're moving back towards that. Now's the time to step back in. So it's just that psychological shift, and it takes time. That's what people get chopped up by. They think these things are going to happen straight away, but it just takes time. Yeah.
We did see a lot of outflows, like we discussed earlier this year. So if the fair value of Bitcoin is significantly higher, based on what you're looking at, why is the market ignoring this math and kind of like following, the outflows I mentioned was ETFs also mainly. Is that just what you said before? That's just human behavior. Because in March, we do see bigger inflows again. We even see Morgan Stanley Bitcoin ETF filing, right? What do you make of that? That's a weird Q1 if I describe it like that.
Yeah, totally. So there's many ways we can measure fair value. My preferred model is the average cost basis for active investors. We can use this with on-chain data. I won't go into the details, but fair value in 2021 through most of the cycle was about 30K. This model was around 30K. It's where we sold off in the middle of 2021, we broke below it in 2022, and we chopped around underneath it on the way back up in 2023. It was very much so the middle. That fair value is now at 80K. So it's added $50,000. That's like the middle. Now, what have we done? We've traded above it, 120, 126. We've traded below it, 60, 70, something, 68. Eventually, we're going to break back above it. So the fair value right now is 80K. It was 30K, and it used to be 8K back in the previous cycle, right? And I don't know what it was, $250 or something in the previous cycle. So
for all the haters, what's the trend?
Correct.
What's the trend? What's the trend you're seeing?
The ETFs have a very much the same pattern. We see a monstrous amount of inflows and then a bit of outflow, and then a monstrous amount of inflows and then a bit of outflow. So the cumulative chart just keeps doing this, keeps grinding higher, comes back a little bit, goes back up again. So, and to that point, when you look at the outflows, we've seen about $11.2 billion. And I wrote a piece about this recently. I'm like, how big is, I asked, ask AI, how big is it? Like, give me a visual representation of $11.2 billion. And it's like, it's, 10 Olympic swimming pools full of $100. It's 20 African elephants. And apparently it's 2 billion Big Macs. So I'm like, that's great. I can really visualize 2 billion Big Macs. Thanks a lot. So, from that perspective, we've had 11.2 billion of outflows, but that compares to 63 billion of all-time inflows. It's like 12%, and the price is down 52%. When you look at it in terms of AUM terms, the AUM, so the total amount of coins that went in versus came out, we only saw about, I think it was 6 or 8% of the total coins that went out. It's very low. And here's another layer to it. When you overlay CME futures open interest, as far as I can tell, something like 80% of those ETF outflows look like somebody who put on a basis trade. Buy the ETF, short the future, I'm just locking in the spread, don't care what the price. It's a structural, it's a trade, an arbitrage trade, not like a bought ETF thing. So what we're not seeing out of the ETFs is Bitcoin's dead, get me out of this thing, I just hate it. We're actually just seeing some hedge fund doing window dressing as we come into December. That's like most of the outflows. So it has this like, the hodlers in the ETFs are actually somewhat better hodlers than many hodlers out there, which is quite remarkable. Morgan Stanley, they're putting their own name on an ETF. After 12 have been active and running for a long time, they're stepping into an already saturated market. Why? Because they want their advisors to issue Morgan Stanley ETF as a recommendation, and they believe that there's going to be a lot of demand for it. I think it's the Bitcoin ETF is the most successful, profitable ETF that BlackRock has. So there is a lot of things where, like, if you look at fair value, it keeps climbing over time. The floor keeps climbing over time. If we bottom somewhere between, 50, 60, 70, if that's like the final base that we end up forming, the previous base was 15K, right? People love to look at top to top. What really matters is bottom to bottom, right? You want to see where did the market say, it's not going back down to those levels. Those levels are ancient history now. So from my perspective, I think that there is just a continual upwards growth. We go up a lot, down a bit, up a lot, down a bit. And that is across every metric, across the ETFs, across the price, across the market cap, across capital flows, up a lot, down a bit.
Yeah. From a long-term hodler perspective, I would say, even though, like I said in the beginning, the downtrend for me was quite unexpected without any reason. I think what you're laying out is that there's a lot of things that are kind of overlapping, right? So there's maybe like a lot of structural liquidity, actually just playing it like a trade. There are these OG longer-term hodlers that reach a certain point. There is just talk of the 4-year cycle, right?
There's also other assets, right? AI is like once in a generation trade as it comes online. There was other stuff to buy that was competitive with the Bitcoin performance. Yeah, there's a ton of stuff going on that front. So yeah, for the first time, like there was just actually something else to buy that was suitable relative to Bitcoin's normal performance. Yeah.
What I wanted to say is, let's say where did we go to? Like 57, 58? Did we touch 58 now again? 58?
No, 60. 60 is the lowest we've gone on this low.
Like if that would be the actual bottom, even if 50, let's say 50 is the bottom, right? Yep. That was easy.
Yeah, I
want to say, right? Like
totally.
Like if that is really it for with all the build-up anticipation, like all these ideas about 2026, etc. I would personally think it would be very bullish, to be honest.
No, it would be.
Yeah.
And I think one of the things that a lot of people missed, it's very hard to quantify this, but think about how sideways 2025 was. Like, for the whole year, we closed at, whatever it was, 98 or something like that. I can't remember the exact number, but we were basically flat on the year, right? Down 6% or something, which is nothing. So we were flat for the whole year. There's a lot of pent-up frustration with Bitcoin just not going up while other stuff did. So, like, in a way, we kind of served the first part of our bear market sentence in the bull market because people were so frustrated by watching other stuff go impatient, so that when the price goes down, it was just this big unload at 80K in November and 60K in February. We go, I'm done, I'm finished. So we kind of speed ran the capitulation, in my view. We got there really, really quickly because of all that pent up energy. We've still got to hammer out the floor, but there's a very, very good case. Basically, when you look at it from a supply structure standpoint, the current zone we're in has about 18.2% of all the wealth that's ever been purchased in Bitcoin. I mentioned before, when you got like 60, 70% who bought the top, now we've got 18.2% who've bought in this current trade range. We normally, in 2018 and 22, when you get to a quarter, 25%, both of them have it, like the bottom has been in and we're actually trending higher again. We were at 10% before we got here in February. So we've seen 8.2% of all the wealth ever invested in Bitcoin accumulated between kind of in the last 30 days, because we only sold down here on the 5th of February. So this zone is the candidate as it stands. Now, can we go lower? Yeah, but this zone is by far the most likely candidate for us to form a bottom. Something really kind of catastrophic's got to happen to kind of break the back of that thing, I think.
Yeah. I have a question now that you're saying this that I didn't write down, but yesterday I tweeted, I thought it was really, yesterday, Sunday. Yeah, like in the weekend, you said maybe something has to happen, right? Multiple wars. I don't know. There's all these, right? So you could say, well, it's not Black Swan-ish, but maybe it could get worse. What I thought was interesting that in all of this uncertainty, oil going up, Bitcoin going down on a Sunday, I actually thought was interesting. I tweeted something along the ways, and I wonder what you think. And I also said this could be cope, but okay. I think that it looks like Bitcoin is actually used as a liquidity tool, right? Because if stuff happens on the weekend with oil, for example, right, and people have to cover whatever their positions are on Monday morning, and there's several people that have talked about this before. Like Bitcoin is the only thing that trades 24/7, 365. Like it does seem that Bitcoin is used as a certain liquidity parking area for bigger traders that are playing, macro type developments like this. What do you think about that?
Yeah. So if you think about it so generally speaking, if you just look at the long arc of Bitcoin's price history, generally it goes up. Over time, it generally goes up. Most of the time, statistically, it actually goes sideways, but most of the time over the long term, when you zoom out, it actually goes up over time. So as an investor, right, someone who's a long-term oriented person, you see the market go down on a Sunday because of some geopolitical headline, and then over the long arc of time, it goes up. So you're like, hey, I should actually own some of this, and I should probably buy some on those scary-ass dips. So for the long-term investor, it actually makes sense to buy it, especially on those low liquidity sell-off type events. If you're a trader, much more short-term thinking, which is what you're referring to, you see that, hey, big headline goes, I can actually get liquidity now because it's a Sunday. I can use it on my Monday morning. And then you see that over the long arc of time, it tends to go up again. So you go, hey, that's actually not the worst parking spot of all time. I actually park some capital there because I might need it for something. So this is one of those, if you bring it back, like Bitcoin gets more useful the bigger it gets. Because when it's a couple of $1 billion market cap, you can't really park much capital in it. When it's trillions of dollars, multiple trillions of dollars, you can park billions of dollars in it and tap that on a Sunday night, and there will be the liquidity for it. So the bigger Bitcoin gets, the more that what you just described actually comes true. And this is where I think a lot of people go wrong is Bitcoiners are so into Bitcoin that we extrapolate our opinion of it and assume everyone else has the same opinion, and it just isn't so. Most people couldn't care less about it, right? Because most people couldn't care less about most things, frankly. They care about the football. Yeah. So for us as Bitcoiners, we extrapolate our deep understanding and assume everyone understands it the same way, and it just takes years to decades for people to reach even a fraction of what most people who've been in this space for a long time understand about it. But it happens slowly but surely and gradually. So, if we bottom down 50%, by the way, that's a hell of a difference to 75. Going from 50% down to 75 is another 50% drawdown from here. You know, going down 95% is going down 90%, and then going down another 50%. So the asymmetry of us not going down 75% is actually massive. It's a whole regime shift.
Yes.
50% was like a nasty dip in 2021. So if we start talking about like Bitcoin getting bigger, drawdowns getting, volatility starting to compress, there's a lot of things here which just, it looks like that estuary of we're just swimming out into a much bigger sea. And there's a lot of sharks out there in the ocean, right? Our freshwater pond, we're the biggest thing in there. Now we're swimming out into a world where there's a lot of big bag nasties. It's going to be a bumpy ride, but it's also part of the maturation. If you keep staying in the freshwater pond, you run out of food.
I would fully agree with that. The 4-year cycle, you said it doesn't exist, right? Or it doesn't exist anymore. What is the new thing you are following, or you think people should pay attention to? If not the halving, like what kind of data point should people watch to kind of understand the cadence that we're in now?
So there is no reason why Bitcoin will follow the calendar, right? So the reason why I say that the 4-year cycle is kind of irrelevant is not that it hasn't been like an approximately 4-year phase, right? I can observe that and see it like anybody else can. My view is that people who anchor to it and say it has to be a 4-year cycle will go through a process of ignoring information that shows when that breaks, right? When that is no longer the case. Their bias will say, no, it has to bottom in October. Not it might bottom in October, it has to bottom in October. So they start believing something. Why? Because the calendar says so, right? Which calendar? The Mayan one? So from my perspective, it's like I prefer to look at what are investors actually doing. So for example, my view is we've seen the price capitulation event in February. That move to 60K has all of the hallmarks of December 2018, of June 2022. What happened after that? In 2018, there was 4 months or 5 months of sideways chop, 4 months. In 2022, there was 8 months. Then we had another dip, and then we had another 2 months of sideways. The bottoms can be all shapes and sizes. But I will never forget in 2018 where I was studying the 2015 bottom and saying it's going to be 12 months of sideways chop because that's what happened in the past. And it was 4 months. And I'll never forget the pain that I felt to the upside in 2019 because I had my engineering spreadsheet out. I was saying I'm going to DCA so much between 4K and 3K. Look at all the coin I'm going to have. And then in April, it just shoots to 14K. So what did I do? I bought a bunch of capital at 14K and I went through a second bear market, which was 2019. Right? That was a whole nother thing. So what I did is I anchored to an unnecessary bias, which is that this bottom is going to be like the previous bottom. This cycle is going to be like the previous cycle. You introduce simplifications, yes, but based on what? What is the mechanism that causes? Why will we bottom in October? Because we topped in October? Because I ran a study recently where I used 8 different methods, right? When do we break below the 200-day moving average? When do we break below this level? Things that happen in early bears. And then I fixed because we have hindsight, I looked at every previous bear. When was the bottom in, right? And I fixed that date. And I said, how many days did it take from the bear market starting thing until we got to that bear market end? And then I modeled them all. I said, well, what is the average time duration between event and here? When did the event happen in our current cycle versus that? We don't know where the end point is. And what I basically found is that the only model that said we have to bottom in October was the model that goes, well, we topped in October. To which I'm like, I love the rigor. So I'm very glad I'm averaging that out because all of the other ones say it's probably not going to go that far.
I wanted to jokingly say, because it's a fractal, bro.
And look, markets are fractals, right? So there are people who are going to behave and say, well, 4 year, therefore 4 year. But there's going to be a point in time where you drop a rock in a pond, The ripples initially come out, they're nice and uniform and consistent, but then you start getting interference, it bounces off the sides of the pond, the ripples interfere with each other, someone else throws a rock in, and then eventually you're like, where's the original ripple gone? And people are like, but it used to be 4 years, and like they just get lost because they kind of don't adapt to new information.
Yeah. Some shorter questions to wrap up. What would make you say my bull thesis is actually broken?
Good question. The price angle is hard because it very much depends on the structure of how the market is performing, and there's a lot of other things that happen. Honestly, from my perspective, it would actually be if the Bitcoin system, the people around it, start getting funny with the code, right? We start trying to say, oh, we don't like that price action is doing. Yeah, we don't like that price action is doing this. So maybe we can like burn people's coins, or we can like stop these people from spending, or starting to play around the edges to try and make price a consensus decision. That's where I think things get really hairy, because now you're introducing the one thing that Bitcoin does tremendously well: removing humans from the decision system. Once you start getting people playing around in the code, thinking that they're magic and that they can solve all of Bitcoin's problems, right? I'm here to fix Bitcoin. I've heard about Bitcoin, I'm here to fix it. When those people are allowed to start making changes, then you start getting into hot water. So for me, it's much more in that like fundamental, when the structure of the system is starting to get compromised by humans. When we let humans in the door for that perspective, that's where I start to get concerned.
So what is the most spicy view that you are holding right now? Like something that you are 90% sure will be consensus later on, but that people would think is crazy today. Let's say 2030.
People sell their Bitcoin. People sell Bitcoin all the time. So the spiciest view, actually, I mean, generally speaking, the pool of people like you and I, who like are so deep in the Bitcoin rabbit hole that it's like our thing, where there are very, 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 very few of us. If you look on chain, there's at most, getting rid of all like small dust transactions, there's 14 million UTXOs, thereabouts. How many people have multiple UTXOs across multiple wallets? A lot. So, sorry, I think it's addresses rather than UTXOs. So it doesn't really matter. So the point is, there's about an upper bound. If every one of us had one coin, then there'd be 14 million Bitcoiners on chain. But then you got to remove exchanges, you got to remove ETFs, you got to remove all that stuff. They got a lot of consolidated wallets, but the number rapidly shrinks when you consider that most hodlers have 10, 20, 30, 50, depending on how long they've been in the market and what their frequency of DCA is. Suddenly you're talking about like 1 million people who own on-chain Bitcoin. So I would say, as I'm kind of live thinking this through, my spiciest opinion is I think we've probably saturated the number of like on-chain Bitcoiners that will ever exist. I think we're very close. Maybe if we have a lot of kids, there'll be more, but like I really think that we've saturated the hardware wallet space. There's only so many people who are going to buy a steel plate and bury it in their backyard. This is why the ETFs are popular. This is why just people are not going to self-custody, not because that's not the right thing to do. It's really hard. And like, you kind of have to really deep in the weeds. Most people just aren't and won't do that.
Okay, wait, I'll ask you a bonus question because I asked this a lot to different people. Okay, so I like your approach. My question is, okay, how many people understand Bitcoin at the level you and I, where we are at? Just what is a number?
It would be under 100,000, well and truly, I would think. You know, and like there's grades. Like I would say, people who listen to more than like 1 or 2 Bitcoin podcasts a week, I would probably put them in that bucket. That's probably like a couple of 100,000 at most. Yeah. Okay. Yeah. Globally.
Yeah, in my mind, I'm at like 100K. I have people that I really respect. They say, no, it's like 10 or 15K.
Yeah,
like,
yeah. So it depends. You've got to define depth, right? If you're listening to 2 podcasts a week, you're into it. That's like 100K.
Probably. Yeah, that's true. That's true. All right. Last question to wrap up, and I ask everyone the same question, which is, what is a core belief that you will never let go of?
That you have to just be honest. You know, honestly, part of our like written down in our like internal docs for my business, is like, just don't be a grifter. And that is actually a business model in this space. To me, just being honest and like having high integrity, it is so, and I get it, is so easy to go down the path of like, but I could get more sponsors. I could get so much more attention, clicks, all the rest of it if I went down the clickbaity path. I could make a ton more money.
Clickbaity is also, it would be your name.
Exactly. Clickbait. It would just be the most unappealing thing to me ever. So I value integrity and honesty very, very highly. And it's also like there's some people who, no matter what you do, they'll be like, oh, you're just doing this because you want paid subscribers. I'm like, dude, I could get so many more paid subscribers if I stopped doing exactly what I'm doing, which is like being nuanced and trying to go through the data and being thorough and like spending 2 days compiling everything. I could make a lot more if I just became clickbaity, right? But it's just not my thing.
All right. Well, Checkmatey, thank you. Really appreciate your time. It was a really great convo, and I hope people find it valuable. Let's stay in touch.
Thanks, mate. Cheers.
Cheers. I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, if you want to help me shine a light on the message of Bitcoin, please like this video and subscribe to stay connected. I hope to see you for our next episode. Bye.